really be denominated either in Bitcoin. So you're either holding Bitcoin, because again, the whole market's going to rise and Bitcoin's going to lead that, or you're holding predominantly Bitcoin plus whatever altcoins you have. And if you want to sell an altcoin because you think that altcoin is no longer bullish, you should be seeking to either go back into Bitcoin or into another opportunity in an alt that you've identified that has a strong chart and is breaking out or whatever, or has a consolidation that it's at support. You do not want to be going and sitting into cash because it's the wrong time. It's really easy to think, okay, well, I'm just going to sit on cash because I'm going to buy a big dip. There's going to be a big dip. There's always big dips, and I'm going to buy the big dip. But the problem is you don't know where that's going to come from. And if you're starting with the assumption, remember from the beginning of the stream, if you're starting with the assumption that this is the year coming up that has the highest potential for returns, and you're willing to take X amount of risk, because again, you can't get any reward if you don't take any risk, then you should be very hesitant, actually, and this is counterintuitive, you should be very hesitant to be holding cash. You should be wanting to have exposure to these assets in the year that the assets are going to go up the most, because you don't want to be trying to time it perfectly, as you never know when you're going to wake up and the coin has gone up 50%. You never know when these moves are exactly going to come, because if they were perfectly predictable, then everybody would be super rich and it'd be really easy. The most money gets lost in this period, right? It's the end of the halving year, 2024, and into the post-halving year. Actually, the most money gets lost by people selling too soon or getting liquidated. They're the two things you need to watch out for. It's actually not about the market dipping. It's actually not about a 20% pullback or a 30% pullback. Because again, if you're holding spot and your coin has still gone up, but it's pulling back, that's an opportunity to buy, or if you're already fully exposed, to just hold. You have to be able to ride out some of the consolidation. This happens on every coin in every market all the way through. If you go back and just look at any coin that's been through bull markets, it's not up only, right? So in 2020 and 2021, Chainlink had this enormous breakout. So this breakout from its summer range, or its 2019 range, okay? From the 2019 highs to the COVID lows, and this massive breakout it had. If you're looking at it in June of 2020, August of 2020, even after this major correction, it comes absolutely nowhere near its bear market levels, nowhere near its previous lows. And it does spend quite a bit of time, 20 weeks, so you're talking 5 months, of going sideways or not pumping or not going up before it eventually goes up a lot more before its eventual top. So it's not to say that you should be aiming always necessarily to just hold stuff through these periods, but what you definitely should not be doing is trying to overplay it. Because it's really easy to think, oh, now there's going to be one of these big pullbacks, I should go fully into cash because there's going to be one of these big pullbacks, and then it doesn't come. It goes higher. Because all the way along, these pullbacks happen, and you can look at it like this one in July of 2020, which many people sold this dip, right? Many people sold this, because this doesn't look like much based on what happened after. But that was a major breakout, a major bull move, followed by a 26% correction. And there's lots of people who sold their Chainlink over here, or sold their bags of whatever coin it was, and said, no, it's fine. It's going to be 2 or 3 months of sideways, and then maybe I'll buy back in or whatever. And then suddenly, boom, away it goes. And by the time they even get a chance to get back in, it's already gone. Do not sell your coins unless you have a clear reason to sell them. Okay, there has to be a clear plan. Dips, corrections, especially in the environment we have right now, dips and corrections, pullbacks are going to be bought. Right? There are people who have a lot of money that don't have enough exposure, that want to get exposure, and so whenever there's a leverage liquidation or a flush or a pullback, and pullbacks will come, they're going to be looking to buy. At least the next 2 or 3 major pullbacks are going to be buying opportunities, not selling. Because, again, Bitcoin, which leads the market, has just broken out of a 7 to 8 month consolidation, which is incredibly bullish, and I'll talk about that in a little bit. And the signal to everybody who is patient, who is higher time frame viewed, who is smart money, is this market is playing out exactly how this market should play out, and it's going to go higher, and we should be getting exposure, not reducing it. So if you're looking to identify periods where you feel like maybe altcoins are too high, right? If you think that altcoins are a bit frothy, you see signs on that I'll show you later about local top signals, then rebalance back into Bitcoin. And if you're an experienced trader, hedge with shorts. If you are a trader who already has systems to trade both ways, so you can go long and short, and you identify that, okay, the market's risen, it's getting frothy, the funding rates are way up, there's a lot of leverage that I can see from high open interest, there is high margin borrow rate or whatever, this seems like it could be a local top, but it's November 2024, so I don't have any reason to believe it's a cycle top, therefore I don't want to sell all of my coins, because that doesn't make sense from a higher time frame basis, but because I'm a trader, I'm going to identify a short, and I'm going to manage my risk. If it's wrong, it goes to new highs. If I'm right, it pulls back, and I'm able to make a little bit of money, make a bit of money on the way down. But essentially, you're just protecting your portfolio. You should not seek to do that, right? Again, nobody needs to do any high time frame shorting in the next year. The first primary option is if you identify that there is signs of a local top, that you would be not overexposed into the higher beta stuff, into the really low cap, riskier stuff that can pull back aggressively, like 50% in a day. You'll be looking, okay, let me take profits on some of these coins that are up 2x, 3x, 4x and move it back into Bitcoin. And I don't mind if Bitcoin dips, because the idea, of course, is not that I'm going into fully cash here, because the timing of the cycle is still playing out, or I want to protect my portfolio. But do not, I can't stress this enough, because it's the biggest and simplest, it's the easiest way to lose money. Right, it's the easiest way to lose money in this bull market is to overplay it and go back into fully cash because you're panicking. And it is panic, right? You're afraid of a pullback, so you go fully cash. There's no reason to do that unless you have high time frame signals that say this market is done for me, right? This bull market is done for me, or I've reached my profit targets and I'm actually ready to take profit per my original plan. It all comes back to plans. The way you build those plans is through bootcamp. Go through bootcamp. When you get to building and testing and taking systems live, take higher time frame ones. Go to daily charts like this. Build your systems to identify what does lack of momentum look like. What does a cycle top look like? When does it look like a blow off top, right? Like this, that I should really be exiting or taking profit. And what are the signs that this market is done? You can do all of that through your building and testing phase until you see those signs. Do not overplay it. I can't stress that enough. Now, taking risk, right? So, leading on from number one, there's a bull market assumption that you make here, right? And I've said this clearly at the start and I'll repeat it again. Nothing in life is guaranteed. If you can't accept uncertainty, then avoid financial markets. In fact, avoid business. Avoid playing sports. Avoid crossing the fucking street. Right? If you can't accept uncertainty, basically don't do anything in life. If you can accept uncertainty, which means I don't know what's going to happen in the future, but I do understand probabilities, and I can say what's more likely to happen, and I can make a rational bet based upon that. That is how you will perform best in a bull market. So you assume it's a bull market. You do not say with certainty that it's going to go to whatever price target, because price targets are mostly bullshit and will only anchor bad things in your head. But you do also accept that this is the time that you want to take risk. You want to take managed risk, calculated risk, and be long. And that's what this presentation, this lesson, this is what it assumes. The bull market is real. Cycles exist, and we have somewhere between 6 and 12 months left. That's the big assumption that is made here. Assumptions are not always correct, but like I covered at the beginning, the risk is managed, because you're not going to be an idiot and use leverage and get liquidated and blow up. And the rewards in this particular year are asymmetric, And they will not be asymmetric in 2026, because that's typically a bearish year, or 2027, again, typically a bearish year. So the time for it to be possible to make more money is right now, and therefore you manage that risk and you accept it. Another thing, you'll see a lot of this now where people try to get smarter than the market and say, oh, well, no, this is all going to play out by December, right? This time's going to be different because it can't be that easy. It can't be that easy for everyone to just buy and hold for the next year. And so it's not going to be 12 months. And I don't think it's even going to be 6 months. I think it's going to front run everyone, and it's going to go up until like December of this year, and then it's all going to top. And so that means I have to go hard. And what actually is happening here is people are rationalizing over leverage and taking massive risk and being short-term minded. You're actually psyoping yourself into thinking that you're being smart, when actually your brain is just justifying reckless gambling. Right? Because you say, well, I believe that this is going to be really, really fast, and it's going to go super, super, super fast, up really hard, really high, and it's going to be a short cycle. Therefore, if I've only got 10 weeks left, I need to go long. I need to go long with leverage. I need to add leverage. I need to fucking double down. I need to go 100% in on all these meme coins and have no Bitcoin exposure and really play it for just the next 2 months. And what you'll see then is that, again, is how people end up fucking themselves up, because they can't believe that the market could actually be bullish for another year. When in reality, a bullish market over a full year does not look the way people think it looks. A bullish market for a full year has plenty of periods in between which are not bullish, right? Which are consolidation. I mean, you need look no further than the start of this year. This was January. Look how good the year started. Massive move at the start of the year, followed by 7 months of shit. And even throughout the proper bullish market, whenever we broke out in December 2020, we had a rally up, followed by a month, right? A full month of not bullish, followed by another move up of about 2 or 3 weeks, followed by really 2 months of not bullish, right? From February 20th till the end of March, about 5-6 weeks, where it didn't make, as a cycle total, it did not make new highs. It was going mostly sideways, though it was rising. And then up again, and then a big correction, right? A big pullback, big liquidations, and then the blow off top, where many individual coins went crazy. And then a big crash, and then a second wave in the second half of the year, which repeated all of this over again. But all these periods in here are either massive liquidations, big shakeouts, or sideways corrective phases. And so, from the all-time high breakout in 2020, which was Bitcoin all-time high breakout in December 2020, to the very, very top of the cycle in November of 2021, that was just under a year, right? That was 11 months. And in that 11-month period, we had a month here, which was not bullish, meaning stuff was not making new all-time highs every day. We had a 5-week period here, in which the same was happening. And we had a very sharp correction. So this one was only 9 or 10 days, but it was significant, very big liquidations, big sell-offs, followed by a total collapse, right? A total crash when China banned crypto, all the way from the top in May to the bottom in July, which was 70 days, followed by a major shakeout. If you remember this one was brutal. Major shakeout in September 2021 for about 3 weeks, and then into the eventual high. So that is 30, 50, 50, 62, 72, 140 roughly, 150, 160, right? 160 days is about 5.5 months. Yeah? So, in this 11 month of bull market, from the all-time high to the top, in that 11 months, there were 5 months that actually net across the whole market did not produce big trends or new highs. So nearly half of it, in a bull market, nearly half of it was not seeing massive price appreciation, not seeing massive pumps. So something similar will happen over the next year. there's going to be many periods where the market drops, and then it looks shit for 2 weeks, and then it goes sideways, and then it doesn't go up for a bit, and then it has a big pullback, and then there's a 10% massive down candle on Bitcoin, which causes 20 or 30% down candles on alts, and leverage traders get liquidated. And all of these times, all of these phases, all of these market conditions are all going to make people quit. They're going to make people give up, either through force, by getting liquidated or doing something stupid, or it's going to make people give up by time, right? Where there's 70 days of shit and they just give up because they're bored and they capitulate through time. Or they give up and they say, can't be bullish if this happens, or anything in between. So a bull market is not just up. Now, if you're saying the next year you believe will be up and to the right, so if we're saying that we're here right now in like November 2020, and it goes to November 2021, so if you're saying that we're in November 2024 and it goes to November 2025, the core, right, if your assumption is correct about the bull market, the core of your portfolio should not be touched for the majority of this. Because again, as long as when it's rising, so as long as the market keeps going up and then corrects, if you notice that you've bought something and the market goes up 100%, so you double your money, and then it pulls back 40%, that is not a reason to sell by itself. Because your portfolio, do not anchor yourself to your all-time high of your portfolio. Base each move on its magnitude from where you got in. So if you start off with 10k and it goes up to 30k and it drops back to 27k or 23k or 22k, that is most likely, especially if it's within the next few months, that is most likely just one of these dips that eventually goes higher. And you might have to sit for 2 or 3 weeks, or you get the opportunity to add longs or get, buy more or whatever, because the market's actually rising. It's not going to always, and this is the point about this, there are 5 months, a minimum out of this. There are at least 5 months where each day you wake up, your portfolio is not at all-time highs. It's down or sideways. So your portfolio will be at all-time highs here, and then for the next 30 days it's not. And your portfolio will be at all-time highs here, and for the next 36 days it's not. And it will be all-time highs here, and then 10 days later it's down 40%. And then it will be at all-time high here, and then it's a brutal crash. And it's not to say you never sell. Like I said, have your systems, have your plans. In the altcoins especially, if they're doing crazy moves, take some profits. Taking profits along the way, back into Bitcoin would be my strong advice. And then remembering that when you're looking at the portfolio and it all looks great and it's all green and it's up every day, that is going to end at some point, and it's going to go into a period where it's not. And you'll be like, oh, I remember my portfolio was 43k just a few days ago. Now it's at 37. I don't like that. And then 2 weeks later, it's at 34 and I don't like that. And the market will try and grind you down. And people who anchor it, they anchor their all-time high net worth portfolio and then are staring at the screen every day, refreshing, are eventually going to capitulate. They're going to give up. They're going to say, I don't want to see it go down more. And that's when it will bottom. So do not anchor your all-time high portfolio level, because at the end of the day, every single person here, assuming you get out of the bull market with more than you put in, so you make money, you're not going to sell at the absolute all-time high. So when you look back, you're not going to have sold every single coin at its absolute top. So at some point, your portfolio will have been higher than it currently is. So there's plenty of people who ended up holding all the way back down. They might have put in 10k here, and at the top, they had 100k. And then it dropped back to 70. And instead of realizing, okay, there's clear signs of bull market top here, and I've got in at 10, and I've now got 70, that's amazing. They said, no, I remember when I had 100. I'll sell when it goes back to 100, or I'll sell when it gets to 90, or I'll sell when it gets to 80. And then they hold it and it's down, and then it's 60, and then it's 50, and then it's 40. And that's how people round trip an entire bull market. So do not focus on the all-time high of your portfolio. Focus on the charts that are in front of you and the current phase that we're in. Identify, is this a pullback? Is it a crash? Is it a leverage liquidation? Is it a correction? Is this somewhere that I should be buying or somewhere that I should be selling? Now, over trading this in the short term due to believing in things like short cycles, or by falling for some of these bearish propaganda about macro factors or whatever while we're in the up only phase, is going to cause you to lose money, not make it.